The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a look at the trade action we saw on Monday, kicking off the week with some good strength in soybeans and soybean meal. Corn was able to claw its way back near unchanged after showing moderate losses through the day. The wheat market found some pressure as well, but kind of also clawed its way back near unchanged. So I'll happy close there, at least compared to where we were through much of the session, but still a lot to talk about in terms of this grain market trade. We got USDA reports at the end of the week, weather, a huge topic, so much going on. Let's dive in. Joining us now, John Heimberg with Total Farm Marketing is with us here. John, good to catch up with you. And, you got a few days away to come back to this market trade. I mean, man, oh man, there's a lot going on, weather, different chart dynamics, things like that, funds, etc., moving here, moving there. Then you throw USDA reports at the end of the week. Just plenty of volatility for us here to round out the month of June.
Yeah, let's just basically put that all out there on one big plate. There's a whole bunch of things going on right in this week alone between, obviously one of the more volatile, if not the most volatile report by the USDA, the all marketing year, which is that June acreage report, as well as those grain stocks numbers, because that's going to set the goalpost in terms of production for the summer. All the way until we see the next set of acre numbers in September. So that's into this. And we got to throw in, it's also cash basis contract time. So anybody sitting on July basis contracts, they got to make some decisions in price or roll. That's going to probably have to happen the next day or so at first notice day on this week. Put in there what's been going on in terms of the weather, the aggressiveness of the selling that we've seen the last couple of weeks here by the funds. End of the month, end of the quarter. Don't forget about that in this whole window here too. It's going to be kind of one of those click the buckle in and hang on type weeks in my mind in terms of what this market may want to do overall. And after we get through this week, we'll have a little clearer picture, at least according to where the goalposts are set, after Friday's report. And then we can attack the market from there as we get into the 1st of July.
I want to start with weather, all the different things on the plate here, and I want to focus on the flooding issues, northern Iowa, northwest Iowa, southern Minnesota, eastern South Dakota, just the pictures, the videos I'm seeing, I'm sure you're seeing them as well, just extreme flooding, devastation. Our thoughts are with folks losing their homes, businesses. No doubt crop losses, I have to imagine, are going to come from this flooding as well. The question that I'm kind of asking, though, and it's sad that I have to, put this out there, but I think let's face facts, it's the truth. It doesn't feel like the market, at least right now, is really putting a whole lot of weight on the potential crop losses here. And I guess the question is, will it eventually, John? I mean, what do you think about that?
It's something that's going to get shaken out over time. And again, I don't want to shed light or make things seem light in terms of the devastation and what's happened to those people in that area. And, the pictures are brutal, just looking at what I've seen, over the last 24 hours or so, in terms of the losses out there and in terms of personal property and things of that nature. Corn and soybean crops are minor in my mind compared to that. But, again, we still got to deal with the market. And the market's going to look at the big picture. We're looking at a 15 billion bushel crop, and a couple 100 million and 300 million out of that area is a significant number, but at the same time, is it a significant number? And that's something the market will shake out down the road. So you saw the market really kind of just not pay attention to it today. I think it just has other things on its mind at this time frame. We're still looking at a crop rating that's going to be close to 70%, good to excellent. I put a lot of windshield time in, obviously making my drives on our vacation last week up into northern Minnesota. And again, I know we're not talking the quote unquote heart of corn country, but those are those areas that if they're doing really well, they will absorb losses in key areas. And, we're hearing some of that talk out there. And from what I saw, 75% of that crop's in good shape. Yeah, they're wet too. They've got wet holes, but everything around that wet hole looks phenomenal for that type of year. Just comparing a year, I was through that area last year. They were keeping the irrigation on just to keep that crop alive. And this year, the irrigators are sitting on the sidelines and the crop is growing beautifully with ample moisture. So what type of yield we're going to get out of that area to balance all this out. That's the questions that come into play in the market's eyes. Realistically, even the derecho year when we had that go through, the market sold off after that for a while because the rain makes grain mentality. It wasn't until we got into the field, started doing crop tours, got the combines rolling, and then we realized, hey, we got a problem here. Yeah, and that could be some of it at this time frame as well. Like I said, I just think there's too many things going on in this marketplace, and then throw in the fact that we're just still looking at a forecast that just looks good for development of crops going into the July 4th holiday, with solid coverage of good rainfall being forecasted across the entire Corn Belt. If that materializes, this market's going to have this crop is made mentality. And we'll probably have to go through the cycle of the market before we really start realizing where things are in the big picture down the road. So again, it's always a tough spot. And again, I get those questions too from producers, and I don't want to make things sound like they're not important. They are important, and they obviously are, more important to those individual people that are impacted. But still, we're looking at a big picture of things. And when it comes down to the big picture is we have a lot of corn. We have a lot of soybeans coming at this time frame, barring major changes in weather. We're having a hard time selling it, and that's still a big factor. And if those supplies continue to build, this market's going to have a hard time to find its footing overall. Now, maybe we got a little footing today. We'll see. I think a lot of it was just getting ready for the reports and everything coming in front of the market this week after that hard sell-off this morning. Also, we just saw things started to find some footing, saying maybe we're good here with those numbers coming at the end of the week, that this market just wants to take a breather, see those numbers, and then go from there.
Well, if we could see some that rain in some of these areas that have been hot and dry, that's been the other thing to watch with the weather here, with the heat and humidity in the Eastern Corn Belt. But that could alleviate some of the concerns there. So definitely wait and see in terms of weather. To your point, it's the big picture mentality here when it comes to weather. Now, that's one caveat, but then, of course, we got the USDA reports at the end of the week, which we alluded to already. Very volatile. Feels like the funds going to have to do some positioning here ahead of this report, and could be an interesting week ahead. So I guess from a risk management standpoint, you look at these grain markets and everything going into them. I mean, what do folks need to keep in mind here this week as they're looking at their marketing plan and trying to assess their overall risk position and vulnerability here heading into such key reports, John?
Yeah, and one thing, going back to that weather and that crop ratings number today, I'm going to be watching what Illinois does. Again, they had hard drops last week, 9-10% for corn, soybeans, respectively, I believe, on terms of the crop conditions. They did not pick up the rain. They stayed hot and dry. We've got some talk from some people through that area. Things are, overall hurting a little bit. Obviously, that can get rectified with one rainfall. Indiana was in that same window, but they picked up a nice rain Saturday from talking to a few producers that just really straightened things out. And it was good to see for them. So that could be an interesting piece in the puzzle, is like you got Iowa, major corn producing state, could be on the heavy wet. And then you've got Illinois that's still going to be focusing on the dry. So that was some of the reason why we saw some of the buying, I think, at the end of the day today, just to kind of square up. Getting back to, kind of your general point, there's just a lot of things right now, and the funds have pushed this thing hard, and this is a spot where they can just take a breather. We'll get the next commitment of trader numbers today. They're delayed from last week due to the holiday on Wednesday. So we'll at least see where the funds are as of last week on Tuesday. And they obviously stayed fairly heavy on the sell side of the market. So especially for corn and wheat going into today. So that's going to be a big piece of this right now, is, we're going to get a lot of numbers. We're going to see a lot of volatility. The market seasonally is not in a good place here. This is typically when that crop is either made or not made, and the market reacts accordingly. I would say right now the mindset is the crop is fairly made, and we could continue to see that seasonal fallout. But this might be one of those weeks. From the risk management standpoint, if we get some rally into that report, defend it. Pick up some puts if you don't want to make the sales. If you're concerned about your bushels, use the put strategies in this regard. If you still feel the market's got to go higher, at least reward the floor. I took some profits off of some short positions, looking to re-enter them now that we bumped up here a little bit. Those are some things I'm watching here to kind of reestablish here if we do get a little bit of a run. The biggest thing is, to me, for especially in corn, there's still a lot of corn in producers' hands. And I think that's one of the reasons we're seeing a hard time in this market. is that corn still needs to find a home. Whether they price some of that July corn now with those basis contracts out there, if they roll them to September, that corn's still going to have to find a home somewhere, and that sets us up for a fairly rough, September window. Is that now, hey, we can't roll this anymore. We got a good crop coming. We got a bin full of corn. It's got to go out, and the market will just take advantage of that. On the flip side, you got beans. Sounds like the end users got most of the control there. So you're seeing that in the July contract. Why is that July-November spread moving the way it is? It was up over 10 cents at one time today. It did kind of come together towards more at the close. But again, you're seeing some good demand, maybe kicking in a little bit for beans on the front end, and that's helping out that July contract. End users are looking for a few supplies. Farmers are fairly tight-fisted because most of those supplies have moved into the end user's hands. And that's a reflection between the two different markets, just given where the bushels are currently. And we'll get more clarity on where those bushels are with Friday's grain stocks report, which could almost be more important at times than those acre numbers.
Yeah, I felt like soybeans too maybe bounced off some chart support there as well on Monday. So a bright spot in an otherwise kind of mixed bag day on Monday. We are joined today for market analysis by John Heimberg of Total Farm Marketing. John, let's go to livestock, cattle. Somewhat surprisingly bearish cattle on feed report Friday. Placements 104% above pre-report expectations. You shaking your head a little bit. Maybe you don't think it was as bearish as I thought it was there, John. Your thoughts on that cattle on feed report and what it means for the cattle market?
Well, it means we bull spread the market more, and we saw more action of that today. Obviously the placement number, that one's always kind of a dart at the board number in my mind, and you got such a wide range of numbers, and it did come in higher. I'm not going to discount that at all in this standpoint, but still the overall picture is still reflecting a fairly tight cattle supply on the upfront. We still got some warm temperatures. How does that affect the growth? You had cash trade at record again this week. Still continues to see good retail demand. And I'm looking at June coming off the contracts this week, trading still $5, $6, $7 under cash. You've got August, trading $5 under June. Right now the August is still running at a discount to the December price. It sure feels like that spread wants to invert and get August over December or October, or some of those deferred contracts. Seen a heck of a move in that spread in the last week or so already, kind of reflecting that. So again, kind of like that soybean market, you got that supply side a little bit tighter, and you've got a strong demand on that front end, and that front end contract, like we saw today, with August up $1.67 on the settle. It pulled December off of its lows, even though December finished a couple ticks down on the day. So that could still be the trend. Now we are getting past that July 4th window in terms of the retail demand. So I'm losing this strength in here as an opportunity to make sure we're thinking about the defensive side of this thing. That all that really does have those heavy placements. Maybe puts a few more cattle in the back end of the calendar year. Take a look at those values out there: 190 April, 188, 185 February, December, respectively. Might be some spot to start making sure we get those floors put back in place. Leave that top side open using those put strategies. So in general, I still think the cattle market is friendly here, especially now that maybe this even triggers a little bit of money flow. The funds haven't really pushed this cattle market, and I think this is a good chance for them to do that here. If they feel like they got something, a little wind in their sails, at least in terms of some of these bull spreads, owning again those August cattle versus the deferred contracts.
All right, on the opposite side, I'm feeling for hog producers right now. Just cannot find any friends in this hog trade. It feels like futures down sharply again Monday. Can we find a light at the end of the tunnel here, John?
It comes down to that cash market. Now you got July in the lead month, trading under the index. So at least maybe that can find a little bit of footing. But boy, some just technical breakdowns today. And you actually saw them during the trade session. All of a sudden we saw July hogs break the 90 barrier, and it dropped $1 in the snap of a fingers. You could just tell there was a bunch of stops sitting there waiting for that price to break. It triggered those. Now maybe that was a little bit of a quick 1 minute washout we needed. The hog values do look a little bit soft here compared to where they should be. But with that being said, the chart damage is just definitely noticeable. December sub 70 today. That was the spread last week. We saw the hogs in July. You kind of run out against that back month, and it gave that back really quickly after a nice couple-day run. So it just kind of tells you here's a market that is feeling the other way around. Cattle market wants the cattle. The cash market's showing it. Hog market, cash market isn't showing it. We're bear spreading there. We're selling those front months against the back months, continuing to narrow up that gap between the two. So just a little bit of scary look right now on the charts in this hog market that maybe our bottom obviously is not here. And they opened the door a little bit with the way we traded today. And that's despite really good exports, and we're seeing product move overseas. But we're just having a hard time in this cash market. And I do think it also becomes the backside of the cattle trade. Cattle trade strong. Let's sell those hogs as their offset.
How about the dairy market? Any notes for us in the dairy trade here as we kick off the week?
Now here comes that cheese market again. It's starting to get some good footing underneath here. Every time you think dairy market looks like it's kind of found its range again. And now if we go and we come back and get some good cheese demand popping in. Right now I think we got a sideways milk market. Put $20 in the middle and see how we trade around that or a little bit above that area. But again, as long as those prices stay supported on the demand front, this market's going to hold in there. Does look like a market that could be a little bit tired, though, with the way it ended out last week and how it traded into the next week. So we'll have to keep an eye on it. But as long as cheese is holding that 190 area, that's going to keep this market supported. Producers, though, make sure you're taking advantage of this here. I mean, it wasn't that long ago. We were hoping to get back to $18 milk, and now we're at $20. Take advantage of it in terms of your marketing plans.
John, final thoughts for folks here today. Anything you want to mention or reiterate as we wrap up the show?
Realistically, in my mind, this week is just going to be darts at a board in terms of where this market wants to go. We're not going to, we'll have the fundamental news. We'll get reactions off that. I do think we're going to see just positions getting ready for Friday's numbers. Again, when you got one of the most volatile reports of the year, you don't want to be leaning too heavy one way or another in the fund's mind. So they're going to square up and take some profits. That could give us a lift, which could provide you some opportunity to get some sales in. As much as we don't want to think because of some of the weather extremes that we've seen last week, the overall fundamental picture is still in the greens. Going into next marketing year on the negative side, and I think producers need to stay active when there's value out there. And again, this is a great area to use puts if you don't want to make sales, but get some type of floor in here, because if all of a sudden things stay fairly calm in weather and the production's there, you're going to see this market struggle.
John, if folks got questions, I know they can reach out to you there at Total Farm Marketing very easily. How can they get in touch with you?
Love chatting with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John Heinberg with Total Farm Marketing. Always good to talk with you, my friend. Thanks for joining us, and have a great week. We'll talk to you next week.
Sounds good. See you next week.
And that's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.